The economic outlook for 2016, so far it's mostly all been doom and gloom. Joseph, do you subscribe to this, or do you think people, and indeed markets, are overreacting, and why?
Markets are overreacting, and I don't really know why. But certainly the economic data that we know of, what's going on in the world, isn't as bad as the markets seem to think. In the United States in particular is doing quite well. Job growth has continued to come in very strong and steady, and we are at full employment and about to test whether maybe we will go above full employment. Inflation is almost at target and heading up. In other countries, maybe it's not so good, but it's not as horrible as the market seemed to think.
The IMF, of course, sounded the alarm recently and has pushed for governments with room in their budgets to ramp up spending and all countries to accelerate delivery of long-term promised economic overhauls. What do you think needs to be done exactly?
There's really two groups of countries. There's the major advanced regions, which is Europe and Japan. I think they really need more macroeconomic stimulus. I think they need fiscal programs, maybe big infrastructure programs in Europe would be a good idea. I think there's been too much focus on the debt. These countries all have very low borrowing rates now. Markets are sending a signal they want people to borrow and spend, including governments. And also the European Central Bank could be even more stimulative, although it did a good step last week. I'd say similar things for Japan, maybe less scope for fiscal ease there, but the Bank of Japan should be doing more monetary ease in Japan. The other group of countries is the emerging markets, and there I think it's a wait-and-see thing. I think people are worried about China. I'm less worried than the market. I think China will manage, and we'll have to see. But if China does slow down more than people expect, their government has plenty of room to stimulate their economy if they need to.
So if you maintain that things aren't as bad as people are really saying they are, apart from the United States, where else are the green shoots? Where's really seeing growth?
That's a problem, is that you don't see a lot of really strong places. What you see is some weakness in some emerging markets. I think the strength is in the U.S., as I said, but I think China will pull through, and I think that is a big question mark, but I'm optimistic they will grow at least 6% this year, which is slower than they used to, but still pretty strong. Aside from that, I guess India is maybe the biggest bright spot where they are still having quite strong growth.
Do you think the main problem is that policymakers are running out of ammunition or have lost the resolve to deploy growth-reviving measures?
No, I don't buy that at all. First of all, on fiscal policy, really it's the burden of the debt, which is not just the amount of debt in terms of percent of GDP, but it's also the interest cost. That's what matters. And interest costs are very low right now. People are begging governments to borrow. They're even paying governments to borrow. So the cost of debt is in some sense negative in Europe right now. It's just unheard of. That means the fiscal capacity is enormous, that the government can go out and borrow and spend and stimulate the economy. People aren't taking advantage of that. I think that's a huge mistake, especially in Europe. But also, central banks have plenty of scope to stimulate more. They can buy far more bonds and other securities, including stocks if they want. The Bank of Japan is buying equities. And there's no reason not to if you need to.
Thanks for watching. For more videos from the Voice of the Market, please subscribe.